Will gold be the best investment? At first, this sounds like a simple question, but the truth is, it's not. There is no clear yes or no. Gold has existed as a store of value for thousands of years, long before stock markets, long before modern currencies, and long before digital money. Empires collapsed, currencies disappeared, and systems changed, but gold remained. For some investors, that history alone makes gold powerful. For others, it makes gold feel outdated and slow. So instead of predicting the future or making bold claims, this video looks at gold as a possibility. Under what conditions could gold become one of the most important investments again? And just as important, under what conditions could gold disappoint investors? To understand gold, we need to understand why people buy it in the first place. Gold usually becomes attractive when confidence is low, not just fear, but uncertainty. When people are unsure about inflation, currencies, governments, or markets, gold often gains attention. It doesn't generate income, it doesn't grow earnings, but it also doesn't depend on promises. Gold doesn't need trust in institutions to exist, it simply exists. Think of gold like a financial shelter. You don't live there every day. You don't build your entire life inside it. But when a storm hits, people run toward it. Gold tends to perform best when things feel unstable, not when everything is going well. One possible future scenario is long-term inflation. Not a short spike that disappears in a year, but sustained inflation where prices rise faster than wages for many years. In that world, cash slowly loses purchasing power. Even if your bank balance stays the same, what that money can buy keeps shrinking. Historically, gold has often done well in these environments. During the 1970s in the United States, inflation reached double digits, and gold increased more than 10 times in price over the decade. In that kind of world, gold doesn't need to be exciting. It just needs to protect value better than paper money. But inflation alone doesn't guarantee success. Another major factor is trust. If people trust central banks and governments to control inflation, gold loses some appeal. But if that trust weakens, gold becomes psychologically powerful. Gold has no issuer. No central bank can print more of it overnight. No company can mismanage it. In a world where trust in institutions declines, simplicity becomes valuable, and gold benefits from that simplicity. Now imagine a very different future, a world of stable inflation, strong productivity growth, and rapid technological innovation. In this scenario, companies grow, profits increase, and capital flows into businesses that create value. Stocks compound, real estate benefits from demand. In this kind of world, gold often underperforms. Why? Because gold doesn't produce anything, it doesn't innovate. It doesn't scale. Compared to a growing company, gold just sits still. In a growth-driven future, holding too much gold can feel like missing opportunities. Interest rates are another key variable. When interest rates are low, holding gold feels less costly. You're not giving up much yield, but when interest rates rise, investors can earn returns from bonds, savings accounts, or other fixed income assets. In those periods, gold has to compete with yield, and it usually struggles. If the future includes long periods of high real interest rates, gold may face strong pressure. Another scenario to consider is market volatility. Stock markets are emotional. They rise on optimism and fall on fear. During major crashes and recessions, investors often look for assets that behave differently from stocks. Gold has historically shown low correlation with equities during crises. That doesn't mean it always goes up when stocks fall, but it often falls less or recovers differently. In this role, gold acts more like insurance than a growth investment. You don't buy insurance to make money, you buy it to reduce damage. Geopolitics also plays a major role in gold's story. Wars, trade conflicts, sanctions, and global tensions increase uncertainty. In these moments, gold often gains attention as a neutral asset. It doesn't belong to any one country, yet almost every country values it. Central banks themselves hold large amounts of gold, not to maximize returns, but to maintain confidence in their reserves. That fact alone shows that gold still plays a unique role in the global financial system. However, gold also has serious weaknesses. One of the biggest is opportunity cost. There have been long periods where gold delivered little or no real return. After peaking in 1980, gold took more than 2 decades to reach new highs when adjusted for inflation. An investor who bought gold at the wrong time and held it exclusively would have lost purchasing power for years. Gold protects value in certain moments, but it can test patience. Gold is also heavily influenced by emotion and narratives. Fear-driven headlines can push prices higher quickly. Confidence can bring prices down just as fast. Many investors buy gold after a crisis starts, not before, and sell it once stability returns. This behavior often leads to poor timing. Gold feels safe, but it can still be volatile in the short and medium term. Another possible future involves digital assets. Some investors believe cryptocurrencies, especially Bitcoin, are replacing gold as a store of value. They share similar narratives: limited supply, independence from governments, and global accessibility. If digital assets continue gaining trust and adoption, gold could face competition it never had before. But if trust in digital systems breaks down, gold's physical nature could become an advantage again. Both outcomes are possible. Central bank behavior adds another layer. In recent years, several central banks have increased their gold reserves. This could signal concern about currency stability, geopolitical risk, or long-term inflation. If this trend continues, it could support gold prices over time. But if central banks change strategy or shift toward other assets, that support could weaken. So will gold be the best investment? The honest answer is that gold is rarely the single best investment over long periods. It doesn't usually outperform everything else, but it can be one of the most important investments in specific environments. Gold tends to perform best when confidence is low, inflation is high, and trust is declining. The real mistake many investors make is thinking in extremes. Either gold will save everything, or gold is useless. Reality sits somewhere in between. Gold is a tool. Its value depends on the problem you're trying to solve. If your goal is fast growth, gold may disappoint. If your goal is protection, balance, and resilience, gold can play a meaningful role. In the end, gold isn't about predicting the future perfectly. It's about preparing for multiple futures. It's not a promise, not a guarantee, and not a shortcut to wealth. It's a possibility. And understanding when that possibility matters is far more powerful than asking whether gold will always win.